cannot hold it, you don't own it.
Central banks have been buying gold like crazy.
Value your wealth in ounces versus depreciating currencies.
Welcome to The Real Money Show. My name is Jeremy Wiseman. I'm joined here by Jerry Correia. And Jerry, we have seen the future. We're back. We believe gold is going to over $8,000 an ounce. We also believe silver will be trading above $200 an ounce easily within the next several years. Everything that we've tracked over the last several years shows us exactly where gold and silver are headed. Right now, we are trading, though, in a consolidated range. Silver is around $70 to $80 an ounce, bouncing in that $10 range. Gold is trading in about a $500 range between $4,400 and $4,900. So I guess that's a $400 range.
Very wide range.
But this is a point where you should be accumulating. And as we go through the show and talk about the reasons to be holding, keep that in mind. Is this a good place to be accumulating? It's certainly lower. We're now down near the 200-day moving average. And for those who haven't gotten into the market yet, hopefully the information we provide will be compelling in terms of a reason to hold real money. And that's why we call this The Real Money Show. So, Jerry, it's been a couple weeks.
Goodness gracious.
Yeah.
Yes, we have seen the future. We've been to the past. And when we deal in monetary policy, when you're dealing with fiat currencies, anything to do with the fiat currencies, repeat, all fiat currencies, if they're not backed by gold and silver, eventually return to their intrinsic value of zero. So we have an idea of what has happened in the past, what went wrong with the currency. As John Maynard Keynes once said, this famous British economist, if you're looking to debauch, the easiest and most surest and most subtle way to debauch or to destroy a nation is to debauch its currency. This is why we call the show The Real Money Show. Gold and silver have been monetary precious metals for thousands of years and will continue to have relevance today, especially in the last few months where we've seen consolidation in gold and silver, very exciting up and down. It's almost like Groundhog Day. There's the strait is open, the strait is closed. The strait is open, there's war, rumors of war. This deal or no deal is causing this choke point, is that whipsaw to the market, Jeremy.
So let me ask you this, because we're kind of mentioning this just before we jumped on, that a big part of the reason why the metals may have stalled here is because oil has gone up. And they're saying the price of oil is inflationary, and so they keep interest rates locked at these higher places. And is that the consensus as to why gold and silver are consolidating? I mean, there could be more factors. There's always more factors. It's just a matter of time. We had a good gain from October through January. Makes sense to consolidate. But is it just stalled because of energy prices?
Yeah, the narrative is that higher oil is like a tax on the global economy. Obviously, everything is tied to energy prices. So you have things like food, transport, manufacturing, shipping, etc., heating, all dependent on oil. So if oil starts spiking because of war and because the Strait of Hormuz that's closed, everything's inflationary, and that keeps inflation elevated. Enter in our central banks that need to fight inflation and keep employment up. They failed on both fronts. Inflation hit 40-year highs, 80-year highs. Employment is down. Employment has actually left, and the industrialists have actually left Canada. So the central banks are actually destroying on both of those fronts. But because inflation is high, they have to come in and say, well, we have to keep rates higher for longer, which puts a headwind on precious metals that keeps the US dollar index looking strong. But the Federal Reserve is trapped because there are signs on the other side, Jeremy. Bigger signs, in my opinion, lack of redemptions. The yields are flashing like 2008. That should be the focus, because what is needed? Liquidity. That is the cause of every recession, every depression. When money stops flowing, when there is no money, you have to start cutting interest rates. So like I said, the central banks are trapped.
Right. So if you're not going to print the money, why not lower the interest rates and help create more liquidity?
Well,
it seems to me that if the oil prices are high, that's restrictive on everything. That's not inflationary per se. like adding higher, we know that adding higher interest rates, all of a sudden you're paying more to your mortgage, for instance, if it's a variable, et cetera. That now you're adding to the inflation by raising the rates. So if you're not going to print the money, which we would agree that's a good thing, why not lower them? Why not try to get the economy going by lowering them?
They're between a rock and a hard place. As you said, even if you raise the interest rates, like a tax, it's like an inflation. However, if you're going to cut interest, you're going to stimulate the amount of money that can be printed. It's going to lead to money printing. It will lead to expansion of the money supply, which is also inflationary. And a gentleman that we follow, David Hunter, said this week, in fact, he was asked, it was David Hunter, he was asked that on the next side of the next global bust, and as JP Morgan said, gold is money, everything else is credit, and credit life cycles go bust. And he laid out a macro equation the financial system simply cannot solve. He projects central banks will be forced to print upwards or lower interest rates and print of up to $50 trillion to save the system. It will drive inflation higher. So this is that doom factor that we have to address. Is it a big doom and gloom, and is it a big bad thing that's going to lead to destruction of our economies and our societies, Jerry?
Well, let's game it out. If option one, they could print a lot of money, that's going to be inflationary. You want to have gold and silver as protection. Another alternative is they bring in a new type of money to the system, and it looks as though the administration in the U.S. is looking at tokenization. They're looking at gold. They're looking at stable coins, et cetera. So the idea is you bring back some form of sound money to the system that can't be printed. It's private money, right? When you think about cryptos and gold, it's private money, right? It's not public money. It's held on your own. There's no counterparty risk. It's not a liability to someone else. When we put cash into the bank, it's a currency that's in the bank, but it's actually we're just a creditor to the bank, right?
They are using our funds as their collateral.
So the alternative is that you go to sound money, and then there'd be a demand for the sound money as it revalues.
That's exactly.
So option one, they print a lot of money. You want to own gold and silver as a hedge against massive amounts of money printing to deal with the debt. And of course, it's inflationary. Or you revalue the collateral backing the money or the money itself, and you revalue that higher. You want to own it as it's being revalued.
Oh, 100%. I mean, as the world is seeing the oil situation play out, what really the big macro play that Guildhall and what we see happening is the I guess dismembering or you start the separation between oil from the US dollar. Nowhere in history have you had the Constitution write that oil is the collateral for that US dollar. You've always had gold under Bretton Woods, convertible, backed by gold, and all interest rates and the exchange rates were pegged. So you had this neutrality there. It created mercantilism. There was prosperity from the 40s up to 71 until they suspended. Nixon suspended the gold standard. You got into the reasons earlier this week, which I thought was interesting. Too much gold was leaving the U.S.
Yeah, I was watching a video, and I'm wondering if I have to reassess the history that I've read in the past. Because we know that Nixon lifted it because of the quote unquote speculators. But at the same time, who were those speculators? The United States had like 22,000 tons, and it got drained to 8,000 tons before they cut the window. And
that's enough.
I'm not saying central banks weren't looking to take advantage of that play. I believe they did, and we've been dealing with the effects ever since. But we've got to go back to it. And countries don't trust each other. And one of the biggest reasons, one of our first reasons for holding gold and silver was always political unrest, meaning not just particular events like closing of the Straits of Hormuz, which ironically has had the opposite effect. Although it's also, touch wood, transitory. We hope that this is not something that's going to go on for several years, and that it happens that the conclusion comes to fruition very quickly. But yeah, they took over the banking system. We've had this ever since. There's got to be a semblance of going back to some sort of Bretton Woods, some sort of sound money. And when it does, do you have to get gold and silver to revalue first or after? I would imagine it's somewhat in between even. And I just think that ultimately you look at gold, for instance, it's undervalued against all of the money that's out there, all of the debt that's out there. And even if you were to just add 20% a year for the next several years, you're at over $8,000 an ounce very easily. That's not even revaluing.
Right.
And on the silver side, there's so much compelling arguments as to why you would want to hold it, whether it's the industrial demand. Yes, there's an AI boom. Yes, it could even be an AI bust at some point, right? There's a lot of investment going into it, but ultimately you're building things. And if you're building things, even if it's a pharmaceutical plant somewhere in America, they're using silver in the building of it. The electricity that's being moved all through, it's all about building up power supplies as well. So
building it out.
Supply, demand, we're in a 6-year of deficit. The technology it's being used for, it's also money. It's also cheaper, right? Not everyone can afford to buy an ounce of gold for $7,000.
It's very true.
Right? But you can get a 10-ounce bar of silver for, $1,100.
$1,200.
So there's a lot of great reasons to hold silver. And then the biggest one is just understanding that if gold is undervalued against the debt, well, where's silver? Silver's undervalued against gold.
Yes.
We're sitting at, I think, around 60 to 1, maybe even a little bit higher in terms of how many ounces of silver it takes to buy gold. Historically, it's 16. They're mining it at 8. This is very compelling, especially if you were to go down to even 35 to 1 where we were in 2011. $8,000 gold, 35 to 1. You're close to 250.
What about this guy? This is the good old cup and handle, the 50-year cup and handle, which we raise our cups and handles to the 50-year cup and handle chart. Now, what does this mean? Guildhall, we share these types of trends because sometimes you just can't rely on the consumer price index that tells us Canadians that inflation's just 2%. So we have to use metrics like what Bank of America called $300 silver by the end of the year, citing the silver to gold ratio. That's our ratio. We don't really, we share that because we need these metrics because the CPI is told us that things are not double-digit territory for us. Insurance rates are not, and they omit certain categories from the basket of inflationary goods. But when you see this cup and handle, it's a 5-decade cup and handle pattern that simply shows that we are heading into another super cycle. Gold and both silver are in a massive third super cycle that if we repeat, again, money repeats. If you repeat what has happened in the prior 2 cycles from 1970 to 1980 to 2000 to 2010, both 10-year cycles, the third cycle started that we're in currently in 2016, 10 years later, to the future, 2026. Sometime around this year, we should have a repeat of what happened before, and that projects gold anywhere from 14,000 per ounce upwards of up to that point, and that pushes silver to around $300 to $500 per ounce. And this coincides with Michael Oliver's information as well. All information we try to share, and as you learn about this market, we understand that many Canadians have never invested, never thought about holding gold and silver in their possession to take home. For the Mad Max scenario, you never know when the lights and power can go out. Well, what about your registered plans? So people come to us to share, so we can share these experiences, because we've been doing this for you guys have been doing this for almost 25 years, Jeremy, and the registered plans, which Jeremy and Paul pioneered back in 2015.
Yeah, look, people come to Guildhall because they're looking to have gold and silver in their portfolios strategically. Now, we help people who've never purchased metals before. We believe strongly in a crawl, walk, run strategy. Start small, get some physical product in your hands, see what that looks and feels like. Because it's a very simple thing to own an asset that is undervalued and has grown tremendously. Gold and silver are up over 700% in the last 20 years. Imagine having an asset like that in a registered account for even 15 years.
Yeah.
It's done amazing, and it's done everything you're looking for from a registered account. You need to beat real world inflation, even if that's at 10%, that's 100% every decade. And then you need to beat the taxation because you deferred your tax. You want to get it back, right? You have to be able to afford paying it down the road. So, that's 130%, 140% over a decade. That's 240% over a 20-year period. And gold and silver are up over $700 and $800 percent.
Yeah.
So it's done more than it needs to do, and it's still undervalued. I digress, Jerry. The thing is people come to Guildhall because they're looking for someone to guide them through a lot of questions. So I'll give you an example, Jerry. People will come to us and they'll say, how does this work? How do you build up the cost of what I'm buying, and what do I buy? And then how does that play with the exchange? Why can't I just buy it in Canadian dollars? These sorts of things. Help us out.
Well, right now, gold and silver are priced in the U.S. dollars. So whether it be any commodity is priced firstly in U.S. dollars. So we're just transparent. We've learned over the years that, trust is down the drain. Canadians were told, forced to do certain things against their will. So trust has just gone down the drain. We understand that. We went through it as well. We just chose to show on our invoices to see the U.S. dollar, and then you use the Canadian dollars. And we are fair with the FX. My background is in currency trading, so I view everything with that lens that everything is denominated in a currency, whether you're in gold, silver, oil, housing, stocks, bonds. Everything is denominated in US. With ounces, you are decoupling your wealth from currencies that are being destroyed, that are down. Roughly, the real world inflation, if we go back to the way that it was calculated, Jeremy, back in the 70s, honestly, when you kept gas, kept food, kept mortgage payments, insurance, we're around 13 to 15%. So what does that GIC give to you these days? If they're giving you 3.5, 5, or whatever yield, adjust it for real world inflation. So these are conversations that we have. What are the right types of silver? Not all gold is silver the same. Jerry and Jeremy can make silver and gold all day long. We can have Jeremy and Jeremy's gold and silver bars, but that does a disservice to you.
So what type of product should people buy?
Good delivery bars. There's a public list that it's available. We'll share that with you. There's a public list listed. If your silver and gold products on that bars list, we accept it. The world will accept it. It's similar to like Canadian Tire. I love Canadian Tire. They use money. You can only go back to Canadian Tire with their Canadian Tire dollars, right? So it's exactly the same way. If Jeremy and Jerry makes our silver bars, we are that counterparty that you need to always be around. So by buying gold and silver or converting into gold and silver bars that are good delivery bars on that list, you're now eliminating counterparties. You can go anywhere in the world. You are untethered, and you are now decoupling your wealth, which is why gold and silver are required by central banks in their countries to decouple their wealth away from currencies. Over digitization, we are undigitizing your wealth. You cannot freeze gold and silver from your possession.
What about the difference between buying actual physical precious metals and getting involved with an investment like a pool account, an ETF? Like, there are ways to get into the market in a very easy way. I always look at them as they're easy because they're cheap, but there's a trade-off. But what's the difference if someone's never done this before between, going through the steps of acquiring, something that you hold in your hand versus something that's only on the computer?
Yeah. I think it's a matter of weighing your portfolio right now. How much do you have denominated in currency? Do you currently have any gold and silver physical? Not the proxies, not what Jeremy mentioned, like stocks, certificates of gold and silver, ETFs of gold, exposure to a market. Because when you want to sell that, you better hope that entity who sold it to you can sell. We're seeing liquidity issues around the world. Redemptions.
Yeah, give some examples.
Private credit defaults hit record highs. Treasury yields surge. Treasury yields, when you see that spiking, that means there's no liquidity in the markets. There needs to be money printing happening. They need cuts. Wall Street Journal, private credit industries trouble surging redemptions, slower fundraising. You also have the Mortgage Company of Canada just last week halts withdrawals frozen funds, top 22 billion.
So
This
in
is
other words,
flashing 2008 all over again, but with more and more debt. So do you currently have gold and silver? If not, we suggest getting your wealth insurance first. Put on your seatbelt before you start pedal to the metal. You can't just start racing without insurance, especially with your wealth. You're not here to roll dice with your wealth. You just inherited the money, or you just worked 3 jobs in an Uber. Like, you're not here to roll the dice with your money these days. No one is. It's either that or you're getting out of Dodge. You're getting out of Canada, unfortunately. How many of our industrious clients over the last 5-10 years have left the country? Because Canada right now is spending, for every $3 it makes, $1 on interest. That is unsustainable. And guess what, Jeremy? Our number 1 export is gold.
It's unbelievable.
All countries import gold. But
well, I mean, I think
it.
Canadians are starting to realize that we are commodity rich, that we could be a lot richer than we are right now, and they're starting to realize the basics of how this country should be working. Because you can see how it's not working. You start to think, oh yeah, that's right. We should be exporting everything and not hating one person in a different country because
the tariff,
right?
The tariff. Why do we have a tariff in the first place?
It's got to be the most. It's got to be the most intolerant thing, that you're going to sacrifice an entire trade situation. Like, I would forsake my best client, right, for the entire company, right, because I don't like them. But what about everyone else I work with? Maybe I need to work with that person that might not be my favorite, right? Everyone understands that. If you were in business and your best client is someone maybe you don't agree with particularly, but you have to run a company, you have a family, you want to make it work, you figure out a way to make it work. You don't forsake it and say, sorry guys, you better all pack up because I'm not getting along with this person right now. No, that's got to be the most intolerant thing I can think of when you think of all the people that work on the other side of the border who may feel exactly as you do, right? You don't know. You're just making an assumption.
Right.
But listen, when it comes to physical metal, the fact is there's no counterparty risk. You've mentioned that a lot of these private funds are not allowing you to redeem. Imagine, look, it's one thing if you went to your local coin dealer because silver's trading at $500 an ounce and they can't buy it back. Let's say that was the case.
True.
You still have your metal and it's still worth $500 an ounce, and your metal is in your pocket, or it's stored in your own home safe, or it's at a vault. It's still yours. You can take delivery of it and take it home. It's not, okay, I'll find another buyer.
Right.
I'll sell it to someone else.
Still there.
Right. I will find that liquidity if that was the worst case. But what you don't want is, sorry, we're just giving you, we're cashing you out at 20% on the dollar, or sorry, we can't cash you out at all. Come back in 6 weeks. Right. Or if you said, well, I'd like to convert my ETF into physical. Sorry, your account isn't big enough. Or if it's a pool account, it's sorry, we don't have the products that you're looking for. We only have 1,000-ounce bars in our pool account. So there's a lot of ways that it can go wrong. We're here to help strategize. Not everything is binary. There's a lot of nuances in between, but we are huge at Guildhall on education. That's why we do the show. We want to get into the details with clients and really show them through. And we are extremely transparent with clients on how the whole thing works. We'll spend an hour to explain step by step the entire registered account process. And with that regard, we help people set up the accounts. We'll help them with their transfers. We help them with their purchases. We'll help them with anything else that's going on within the registered accounts. Now, we're not financial planners. We're dealing specifically with the precious metals and handling the buy and sell of physical gold and silver. And as easy as that is from a top level, you get into the minutia of it, right?
Okay.
And there's also a lot of psychology.
Yeah.
There's also a lot of psychology. You know, right now, the market's consolidating. People love when things are moving up. They want everything to be happening right now, today. And you have to think long term, because if you could go back and say, would I have loved to have bought silver 10 years ago and be up 700%? The answer is yes.
Of course.
Right? If I decided to just get rid of it today, what might I be losing out in the future? And I think when we bring everything together of all of the signs that we're seeing, right? Whether it's the technology growth, the debts reaching their pinnacle, the issues in the financial system, et cetera, all roads lead to both gold and silver. So we're very excited.
And we have seen the future. And the future looks very bright, as although there may be flashing red signals, we are heading into the future, and the future looks very bright for those who hold physical precious metals. So you want to get in touch with Guildhall and find out the steps on how to do this the right way. And just circling back, we want to realize what type of shifts that are happening. This is resets happening. It's a shift away from the Keynesian, going back to the top. Keynesian, we're going back to a Bretton Woods 2.0. We saw just this week, it's moving away from what went wrong. Why can't there be redemptions? Because the type of system that we have was set up for your funds to be used as collateral within the system, to be used as collateral in a fractional reserve banking system. The reason why you can't get your funds is because it was lent out over and over again. This collateral is very key, and it's very important, and it's your sovereignty. That is what keeps you whole. And with the trends that are moving, and why we had Judy Shelton on the Market Squawk this week on CNBC. She's back in the news. She was elected. She was not elected. She was voted to become part of the Federal Reserve Board in 2016 under Trump. But the rhinos there pushed her out. She failed, but she's back into it, especially on the week when we have the new Fed being transformed by Warsh. We have a new guy in town. And then we are following the moves away from the old Keynesian crown banking system that uses you, the SERP, your taxpayers' money that was used to fund everything from in the States. Look at Doge, what they found out. 60 millions for indigenous and Afro-Colombian empowerment, 74 million for inclusion justice, 79 million for literacy programs in Kenya, DEI programs in Serbia.
And you got to wonder how much is being skimmed off of all that to fund whoever.
In Manitoba, you have this, one of the biggest drug busts on Crown land and native territories. All of these are coming to roost. We're following the money, but as we're following the money, all the money has to do with precious metals. We have the Silver Act. You have the Genius Act, the Project Vault and Project Forge, Project Agora, all of these new Silver Act. What that means, it's setting up a new system away from using your collateral, but finding the real collateral that the US has, resources, building it out on the blockchain. It's a major upgrade, but it's an upgrade for sovereignty, freedom, and away from, pillaging just, the people. Using taxpayers, eliminating income tax.
It's moving towards productivity.
Productivity. And productivity does not mean inflationary, is what Judy Shelton this week said. She's like, there is a Keynesian idea that growth and employment in the eyes of these economists is inflationary. But if we're growing, we're expanding the economy, we are creating supply. On the other hand, it actually pushes inflation down.
Right.
So we're going to be seeing cuts in interest rates, but preparing it for backing it up. Otherwise, as this guy says, 50 trillion to print. Dave Hunter said 50 trillion to print. That's inflationary. How do we protect that? You back the currency up with the gold and silver. Prior to the ending of, or just around Bretton Woods, in the 40s, whatever the debt level was, 30% of the debt had to be gold. Today, only 3% gold represents all of the trillions in debt plus unfunded.
So there's a lot of gold that needs to be acquired to get that up,
or
revalued,
or revalued, whichever.
Yeah, I think there's there's pillars here. It's you need to increase productivity that brings prices down through competition and more stuff. You want to lower interest rates so that people can borrow money, but you also need to get rid of corruption, where the money that's out there in the system isn't being used ultimately against you. And you do want to limit money printing as much as possible. So you need to bring discipline back into the monetary system. So there's a lot of different things that are going on. We see a lot of these changes happening, a lot with, all of the things you just mentioned a few moments ago. And we're going to keep bringing you all of the information that we hope makes gold and silver a compelling option for you to have in your portfolio. Now, we believe in physical. We believe in holding it outright. And whether you're buying it direct with Guildhall, we're happy to help you with that. Maybe you're looking for some storage. Maybe you're looking for the ability to have it secured in a vault facility, allocated, segregated with serial numbers, and the ability to buy and sell on a phone call. Liquidity is important. And then, of course, there's the registered accounts. Give us a call. We'll show you how to get involved. Jerry, thank you so much. And thank you to everyone who joined us on The Real Money Show. Catch The Real Money Show here on Rebel News Saturdays at 1 p.m. If you've missed an episode, you can also catch The Real Money Show on our YouTube channel at Guildhall Wealth, or follow us on Spotify and follow us on Twitter as well. The number again, 1-877-8-SILVER, the website, guildhallwealth.com. Learn how to have physical gold and silver in your portfolio, and we look forward to speaking with you soon.